What's going on, everyone? We have a pretty big filing to talk about out of the OCC. This one is OCC 2021-014. It's a proposal to amend their cash and investment management policy. Let's go ahead and take a look. And the OCC is the Options Clearing Corporation. So basically, this was filed January 6th, and it's again, proposal to change the rules concerning the Options Clearing Corporation's cash and investment management policy. So the purpose is, number one, they're formalizing OCC's policy for safeguarding cash and related investments. And number two, amending OCC's rules to ensure access to the clearing fund if a non-bank investment counterparty fails to return clearing member cash deposited in respect of margin or clearing fund requirements. The cash and investment management policy. OCC proposes to file its cash and investment management policy as a proposed rule of the clearing agency within the meaning of Section 19B1 of the Exchange Act. The policy would include statements of purpose, applicability, and scope, safeguarding standards for maintaining cash and related investments to minimize credit and liquidity risk, and guidelines for investing OCC cash and clearing member cash, as we will get into below. The policy would define OCC cash to include working capital related to future operating costs, inclusive of financial resources held to meet liquidity and resiliency requirements, proceeds from lines of credit, if any, maintained to support OCC's working capital, the minimum corporate contribution, and investments made with the OCC cash. The policy would not apply to cash held in respect of OCC's pension plan, post-retirement welfare plan, or other deferred compensation plans. The policy would define clearing members' cash to include clearing fund cash deposits, cash deposited by clearing members in respect of margin requirements, cash held in liquidating settlement accounts for suspended clearing members, proceeds from OCC's syndicated credit facility and liquidity facilities, and investments made with clearing member cash. The policy would not apply to non-cash collateral deposited by clearing members to satisfy margin or clearing fund requirements. So OCC cash. Unless invested, OCC cash would be held in demand deposit accounts or at a Federal Reserve Bank. Demand deposit accounts would be limited to commercial financial institutions that meet initial and ongoing standards for depository banks outlined in OCC's procedures concerning its banks' relationships. The Treasury would be responsible for maintaining appropriate levels of liquidity in OCC's operating accounts to meet general business obligations and regulatory requirements. To fulfill this responsibility, the policy would provide that OCC may maintain bank lines of credit for working capital purposes. The source of such credit line would need to meet the standards for credit facility banks outlined in OCC's procedures concerning its banking relationships. Clearing member cash. The policy would provide that unless invested, clearing member cash would be held in a demand deposit account or in accounts at a Federal Reserve Bank. With respect to commercial banks, clearing member cash would only be held in financial institutions that meet the initial and ongoing standards for depository banks as provided in OCC's procedures concerning banking relationships. Sounds like a repo, doesn't it? The policy would provide that a clearing member cash collected at OCC settlement banks may be transferred to other depository banks, including to and from OCC's bank accounts for settlement, investment, and cash management purposes. Upon the suspension of a clearing member, OCC would promptly move all margin clearing fund cash related to the clearing member into a liquidating settlement account for use in meeting the obligations of the clearing member as provided under OCC's rules. Treasury would be responsible for ensuring accounts are appropriately funded to meet financial obligations. Interest earned on clearing fund cash deposits held at a Federal Reserve Bank would accrue to the benefit of clearing members less a cash management fee. The policy would also provide that OCC would employ a bank account structure that segregates customer funds, here we go, per applicable regulatory requirements and OCC's bylaws and rules. So they're also going to be segregating customer funds. That's great. That's just great. So their investment strategy. The policy would provide that OCC's investment strategy is to preserve principal and maintain adequate liquidity. After principal and liquidity requirements are satisfied, only then would management seek to optimize investment returns. OCC would disclose its investment strategy through its public website on a periodic basis via its qualitative disclosures to the principles for financial market infrastructure disclosures. The investment of OCC cash now. The policy would provide that OCC cash may be invested in instruments that pose minimal credit and liquidity risk pursuant to applicable regulatory requirements, OCC's bylaws, the investment strategy, and the board or CPC approved investments. Approved investments other than in government securities would continue to be subject to board or CPC approval, as required under Section 1 of Article IX. In addition, investment of working capital in excess of 110% of OCC's target capital requirement would not be limited to overnight transactions. And then we have a super note here that says, with respect to OCC's liquid net assets funded by equity in excess of 110% of the capital requirement, the board has initially approved investment of such funds in government securities through DVP transactions for terms no more than 30 days. Repo. DVP means delivery versus payment. Por repo fund. So investment of clearing member cash. The policy would further provide that clearing member cash may be invested in government securities by OCC in transactions that provide next day liquidity, or overnight repo, in accordance with applicable regulatory requirements, OCC's rules, and the investment strategy subject to the following guiding principles. First, the policy would provide that notwithstanding the authority to invest clearing fund cash under OCC Rule 1002, it is OCC's policy not to invest clearing fund cash, which is instead maintained in accounts at a Federal Reserve Bank or a commercial bank. Second, the policy would provide that margin cash would only be invested in instruments that provide liquidity to OCC by the following business day. Third, the policy would provide that OCC will implement procedures to ensure that end-of-day margin cash balances remain above the aggregate level of any required cash deposits, as that term is defined in OCC's liquidity risk management framework. The policy would also describe how OCC maintains liquidity facilities for immediate access to a liquidity in the event of a suspension of a clearing member or failure of a bank, securities or commodity clearing organization, or investment counterparty to meet an obligation owing to OCC. So basically, in anticipation thereof, the proposed amendments to which are discussed below, the liquidity providers for these facilities would be approved and monitored according to the OCC's third-party risk management framework and liquidity risk management framework. So they're filing for liquidity, to have more cash, to have overnight financing, Federal Reserve, margin requirements. Do you see where this is going? They're trying to get more safeguarding for the repo, or for the whatever event's coming in the near future. Now, OCC proposes to amend OCC Rules 1006, which governs its ability to access the clearing fund in the event of the failure or anticipated failure of bank to meet a settlement obligation with OCC, to extend such access to the failure of a non-bank investment counterparty to meet settlement obligations with OCC under the conditions identified in Rule 1006, paragraph C and F. So they're going to be restating 1006F, and amendments to that are as follows. To ensure that OCC may access the clearing fund in the event of a failure or disruption of a non-bank with whom OCC has invested clearing member cash, OCC would amend OCC Rule 1006F to include investment counterparty to the list of counterparties. Currently, any bank or securities commodities clearing organization. They're going to be borrowing, whose failure or disruption may result in a borrowing under Rule 1006. So, borrowing under Rule 1006. Rule 1006 F2A would provide that OCC may use funds it takes possession of to meet obligations, losses, or liquidity needs, or borrow or otherwise obtain funds through any means determined to be reasonable at the discretion of the chairman, CEO, or the chief operating officer, including, without limitation, pledging such assets as security for loans and or using such assets to effect repurchase, securities lending, or other transactions. I knew it. They were hinting to it the whole filing. Then we finally get to it, and there it is. Overnight transactions repo. And oh yeah, by the way, it would also be restated to remove engendered pronoun. Awesome. Finally, Rule 1006F4 would relocate OCC's authority to refuse clearing member substitution requests regarding securities contributed to the clearing fund that the corporation has taken possession of under Rule 1006. In essence, OCC needs to safeguard cash in the event of a defaulting member or a liquidity crisis. The policy would provide that unless invested, clearing member cash would be held in a demand deposit account or in accounts at the Federal Reserve Bank. Margin cash would only be invested in instruments that provide liquidity. Any bank or securities or commodities clearing organization is now included as a counterparty. And OCC may use funds it takes possession of to meet obligations, losses, or liquidity needs, or borrow or otherwise obtain funds through any means determined by the CEO or the chairman, including repledging such assets as security for loans and or using such assets to effect repurchase, securities lending, or other transactions. Yeah, it's more repo fun. Yeah, they're trying to get cash, safeguarding, beefing up before they slaughter all these medium and small players when, these rules finish up coming out later this month, next month, and the month after that. So, execution for a lot of people this year who haven't been paying attention. Stop chasing the hype. This is the reality. They're about to fuck everybody.